Let's kick this off. I think more people will be joining as we get going. So hello everyone, and welcome to Endeavor's first series of webinars. I'm delighted to welcome you all. Today we have two amazing speakers, Alan Taylor, Managing Partner of Endeavor Catalyst, and Shady, CEO of Tribal Credit and Chairperson of Endeavor. We're very excited today that we have about 400 people registered from about 30 countries around the globe. Very excited for this session. So the agenda for the webinar is that we'll kick it off with a 20-minute Q&A, and then a 20-minute fireside chat, and then we'll follow it by a 40-minute questions and answers. Feel free to use the questions, to ask questions using the questions button at the bottom of your page. Your questions will only be visible to the panelists until they're answered. So let's dive into this, the future of VC investments in Egypt and the MENA region. Let's get started.
Thank you. Well, I'll just give a quick intro on Alan and how we go way back. Alan's been around with Endeavor for what, 17 years now, Alan?
Something like that, yeah. It's been a while.
It's a lot. And you guys have helped entrepreneurs raise more than 10 billion in capital. Alan lives in California, and he runs the Endeavor Silicon Valley office. He's also the managing partner of Endeavor Catalyst, which is 10 years old. Endeavor Catalyst has made more than 300 investments in emerging markets. We have more than 50 investments in MENA, more than 10 in Egypt. I don't know if you count tribal in that one or not, but yeah, 10 in Egypt.
We'll count you. We'll count you.
Count
if we count you, I think we have 11 in Egypt.
11 then. And you've, out of the 300 or more, you guys have 50 that are now unicorns, right? So it's a pretty strong hit rate, right? And I've known Alan for what, 12 years now, since I've been in 2010 or 11, so 13 years now. Alan's one of my favorite people at Endeavor because he just personifies the Endeavor spirit, his engagement, energy, the support, and Alan just has a big smile on his face even when he's upset. I don't know how you do that. So let's get started. I mean, I'll start with what's really top of mind for many of us and really the sad events in the region. I know Endeavor Catalyst has been around since 2014. What's happening today in Gaza is something that you've seen before, unfortunately. And the two questions really are, how does this impact kind of the regional fundraising process or velocity? And number two, how have you seen these geopolitical events weigh into VC's decision-making process when considering investments in the area, when these VCs are outside of the area? So first, kind of impact on regional fundraising. Number two, outside of the region, VCs.
Yeah. No, they're great questions. And look, I should focus on and emphasize for the audience listening, at Endeavor and at Endeavor Catalyst, we support entrepreneurs and we invest exclusively in emerging markets and kind of underserved places, right? So we are no stranger to adversity. We've been doing this work at Endeavor for 25 years, 26 years now, I guess. And the places we do it, Latin America, Southeast Asia, Africa, the Middle East, and even to the degree we work in Europe and the US, it's in sort of these underserved regions. So, in some ways, we in particular are kind of built for and focused on, kind of challenges and obstacles that come up in working in these markets. Amr, since you started there and it is obviously on people's minds, we should start by saying our hearts go out to everybody affected by what's happening there. It's a very unfortunate situation. Not being experts in geopolitics, we won't focus there, but we'll focus on the impact it has on our work as venture capitalists and as believers in and supporters of entrepreneurs. And it will have an impact, particularly on the global pools of capital that really are looking for the best opportunities everywhere, right? And so I'll make a distinction between sort of regionally designated pools, right, that are set up only to invest, let's say, in Asia or only focused on the Middle East, versus global pools, which tend to be more in the larger venture funds and the later stage growth equity funds that are really investing globally in the best available opportunities. And remember, they're in the business of kind of underwriting the best risk-adjusted return for their money. And so when something like this happens, for the really sophisticated investors, it actually doesn't change much because they already have it in their model, right? That something like this could happen, that given the backdrop that, you know, there is the potential for events like this to take place. But at the end of the day, funds globally are run by human beings, not by computers for the most part. And humans are susceptible to recency bias in terms of bad news and just kind of opening the newspaper and seeing what's going on. So, you know, our fund we're one of the most active investors in the broader Middle East region. We will continue to be, and actually we can talk about how and why, because that's our focus and our mission and what we're dedicated to. But a lot of my, you know, neighbors here in Silicon Valley, or we were in London 10 days ago, you know, global pools of capital will certainly be less available than they were before this started.
And with that, we also know that there's just a lot of opportunities and obviously challenges that are awaiting entrepreneurs over the coming 2 to 3 years. The macro conditions, some are favorable to businesses, others can be making it a little bit harder. We know Endeavor entrepreneurs, like, they don't stop at anything. But it'd be good to kind of understand how you kind of gauge that blend of opportunities and challenges that await us as Endeavor entrepreneurs.
Yeah,
or, I mean,
sure.
all entrepreneurs, of course.
Yeah, well, and look, it's a good opportunity to talk about Endeavor's theory of change, right? And Amr, it's fun to do this with you because you are an Endeavor entrepreneur and have been for more than a decade. And essentially, the reason we built Endeavor and the reason I've spent almost 20 years of my life working on this is we really do believe entrepreneurs change the world, right? This is the remarkable individual theory of societal change, right? It's not governments or big institutional actors, but it's remarkable people, it's incredible human beings that build organizations and build companies that allow this amazing stuff to happen, right? And so that belief is very, very steadfast through almost any kind of adversity, right? Like whatever the world can throw at you, like we still believe in entrepreneurs. In fact, what we've seen over the last few years through things like March of 2020 with COVID, you know, some of the challenges that have taken place in a lot of our different geographies related to their currencies, you know, challenges that have gone on in politics, even now, you know, starting with Russia's invasion of Ukraine, and then now what's happening in Gaza. You know, they create uncertain conditions and adverse conditions that in many ways entrepreneurs are the best built to handle that uncertainty and that adversity, if it makes sense. And I actually think that emerging market entrepreneurs in particular, this is my own personal bias, are even more resilient, even more persistent, in some ways even stronger than their brethren in Palo Alto or sort of, quote, easier places to build businesses because you've had to overcome so much. And so, you know, while there are plenty of things going on in the world that we can see as challenges and as negative, I do believe in that old adage that, like, those are opportunities for founders and for entrepreneurs to build things. If we really zoom in on sort of the dynamics of what's happening in startups and scale-ups and venture capital these days, you know, I think it is a real opportunity for strong companies to get stronger, for good entrepreneurs to bring even more high-quality, good people to their teams. I mean, we get into details, but a lot of things like this. So it's interesting. My wife makes fun of me because every time I come back from a trip, right, whether it's to Indonesia or Pakistan or Egypt, I say to her, man, you wouldn't believe how well things are going in Egypt, right? And she says, like, do you read the news? Like, have you seen the headlines? You know, but the point is to not focus on the headlines, but beyond the headlines to where real entrepreneurs, high impact entrepreneurs are doing really important work on kind of building the future and creating the jobs of tomorrow.
Yeah, I remember also when we were in Cairo for earlier this year for the Endeavor Gala, we had a group of VCs in a room, and you were sharing some very interesting data about your investments in Egypt and in the region. I don't know if you can share some of that, this journey of investments you guys had and what you think maybe the horizon looks like. I remember how you've shown some of these companies that through kind of the most adverse times were just doing so great, like some of the examples that you shared maybe in Turkey during the devaluation and others, right?
Yeah, I mean, look, a couple things go into that. One is this old saying, and we've talked about this, Amr, but your average overnight success story that you read about in the news or TechCrunch or whatever, this company got, became a unicorn or got acquired for, $3 billion. Usually those are like 10 to 15 years in the making, right? And so it takes a long time to build an overnight success story. But I'm a big believer in this idea that, if you focus on kind of 10-year increments, right? There's a Bill Gates quote about this, that human beings overestimate what we can do in 1 year, but we really vastly underestimate what we can do in 10, like what we can do in a decade. And think about stories like Kareem, right? Which is basically 10 years old. I think maybe it's 11 years old now, right? But they made this amazing video last year of like the first 10 years. And like, that's an incredible thing that's been built in 10 years. In 6 weeks, we're going to be honoring in New York City for Endeavor, the founder of Nubank from Brazil, right? Now a US publicly listed business, $35 billion market cap, not only the biggest digital bank in Brazil or emerging markets, but the biggest digital bank in the world, right? And Amr, you're nodding because with Tribal, obviously you guys know this space very well. Yeah. But I bring up Nubank to say the company's 10 years old, right? Like in 10 years, they built that, right? And so I do think there's something very real here to kind of playing the long game, right? Or sort of raising the horizon and imagining what might be possible. What I shared when I was in town in Cairo, and actually what I've been telling people all year is, we now have about a decade worth of data on our first venture capital fund, right? So Endeavor is not primarily a fund. We're an entrepreneur support organization, as many people listening will know. But 11 years ago, we set up Endeavor Catalyst to be our venture fund, kind of to prove to the world that, hey, we don't just believe there's good entrepreneurs in all these places, but actually, I think they're great investments. Like you can make real money doing this. And so now we have a decade worth of data on actually investing in these markets. And, when venture funds are set up, for those of you who know the business, right, people are trying to get 3x your capital or maybe 5x your capital, right? Like that's considered a really good venture fund if you can invest $10 million and turn it into 50. Our first fund is at 8.5x return. I mean, DPI, right? Money back through exits, IPOs, and acquisitions. And we made 8.5 times our capital investing in 12 different emerging markets, right? Today we're in 42 markets. But the main places we made money were Argentina, Brazil, and Turkey, right? In fact, I talk about Turkey because, we've made something like 11 to 12x return investing in Turkey in fantastic companies like Yemek Sepeti and Peak Games and others. And in that same decade, Turkey has gone through an incredible amount of adversity, right? Currency devaluation. I think the lira has lost 90-something% of its value against the dollar. Political turmoil, attempted coup, major earthquake, like all these things have gone on. And yet it's been a great place to invest because there's great entrepreneurs building real businesses with real customers, and I think that's again, kind of in the spirit of getting beyond the headlines, that's the part you really have to focus on.
Yeah. And just to be clear, like these were dollar investments, right? So with the devaluation, you guys have been seeing this appreciation in dollars despite, right?
Yeah, those are all the numbers I'm giving you. We're a global dollar denominated fund. Those are dollar on dollar returns. Exactly. Now, we can get into details. I think late stage investors, private equity guys who have a 1, 2, 3 year time horizon, they're very vulnerable to currency fluctuations, right? Because they're playing like specific games, and if the currency changes in any given moment, that's very stressful for them. Our model, aim for 10-year time horizon and see if you can 100x a company's growth. Can sort of absorb a lot more in terms of currency changes.
No, it's a great point. And I think people kind of forget. Like you get on LinkedIn and you see everybody is raising and closing except you, and you're like, what the heck is going on? Like, so it's really, thank you for telling kind of the behind the scenes story and just reminding all of us that it takes time and it takes effort to get to some of these successes, huge successes.
Well, the other thing that's very unfair about what you see on LinkedIn, right, or what you see in TechCrunch, is everybody shows up there on their best day, right, at their best moment. It's like, look what happened in the company today. You don't see the previous 100, 200, 500 days of struggle and all the effort and work. And, the most successful founders who have real humility are able to come out once they've been successful and talk about, I think Mudassir from Kareem talks about like the 2 or 3 times the company almost died, right?
Yeah.
And every single success story has a few of those like near-death experiences, like payrolls on Tuesday and we're not going to make it, or having to do layoffs or having to go through tougher environments.
Yeah.
Again, if you play this for the long term, almost every company is going to have that happen a couple of times. Typically, that's not on LinkedIn, right? You don't see that part. And so
Yeah.
there's a little bit of a kind of selection bias to what news we do see about other companies.
I think everybody here probably has read The Hard Thing About Hard Things a few times already, but I think it's there's that story, and it's pertinent to where we are today with Ben Horowitz seeing a market turn and how he had to deal with that and go to raise for an IPO at a time where it was just like, are you nuts? And I think I went back to that and it was like as if he was talking about the times that we're in right now.
Yeah.
Now we're starting to see questions as well, so I want to start taking some of those. I have a question. You're seeing various companies and funds in the region. How are you seeing various companies and funds in the region thinking about potential exits?
Yeah, so exits are a good topic to talk about, and liquidity. It matters for founders, it matters for investors, it matters ultimately for LPs, right? The folks who put money into venture as an asset class. I will tell a little bit of a story and then talk about where we are today. The story is when we set up Endeavor's fund, Endeavor Catalyst, back in 2011, Endeavor was already 15 years old, and we had screened thousands of companies and supported hundreds. And we went out with this presentation to say, hey, we think we can build a venture capital fund on top of what Endeavor's done. And the main feedback we got was, okay, we believe you that there are good entrepreneurs everywhere. Well, some people did. Some people said, no, everybody has to move to Silicon Valley, right? So the contrarian belief was that you could do this all over the world. But the main question we got was, well, what about liquidity though? Like, how are you actually going to make money? Like, how do you get money out of these businesses? Can they go public? Are there acquirers? Will they get bought? And so, Amr, if we had done this conversation even 4 years ago, right? And 4 years ago, we already would have been almost 7 or 8 years into building Endeavor Catalyst. We didn't have very much liquidity yet, right? We didn't. We had, I think, maybe 6 or 7 exits total out of 100 or more investments. And then when this window sort of opened in 2019, 20, 21, 22, we've had 24 exits, right? We had 10 Endeavor companies do IPOs, 1 in Indonesia, 1 in Brazil, and 8 in the US, listed on the NASDAQ or the New York Stock Exchange. And so I went back to some of those people 10 years ago and said, well, here's your liquidity, right? Like it took a long time, but it will come eventually. And there are kind of windows, I think, during which global capital markets essentially put money in the hands of institutional investors, that's for the public markets, and of big companies, that's for the acquirers, where it leads to real liquidity for the startup ecosystem. But it's not a steady state, it's not constant, and there are times when more of it will happen. Now that said, even where we are today, 2023, we had an Endeavor portfolio company in Brazil called Pismo get acquired for $1 billion this year by Visa. Earlier in the year, some people on the call would have seen the news about InstaDeep being acquired. That was an Endeavor-supported company in the AI space. Started out in Tunisia, right? The founder is from Tunis and built, all this great engineering team. Maybe some people from the team are listening, right? Based in Tunisia, that's an almost $700 million exit, right? For our venture fund, we made 10x in 3 or 4 years.
Nice.
But it's a fantastic outcome, even in 2023, when like our own board told us at the start of the year, like, well, just plan for 0 exits this year, right? Which isn't true, right? Even in environments where there's less going on, there's not 0 going on. So, my view on today, emerging markets in general, but certainly for the Middle East, the liquidity markets are not deep, right? And this is a message for founders. So if you're getting to, year 6, 7, 8 of building your company and you're venture backed and you're the number 3 player in your space, that will be a challenging environment to get liquidity out of. If you're the number 1 player in your space, you have options, right? You'll have M&A options. You'll potentially have options to go public. One of the things Endeavor is actually working on behind the scenes is trying to make other public markets more credible places to list companies, right? Because today in the US, to get analyst coverage and to really be a meaningful public business, you need at least a few $100 million of revenue. You need a market cap of probably at least $2 to $5 billion to be a relevant US listed company. Now, there are lots of companies listed who are smaller than that, but our view is that your stock won't get covered by analysts. You won't really get liquidity. And so the US market, I think, is a fantastic exit outcome for larger businesses. But we're working in Singapore and Indonesia and Saudi and the UAE and Brazil and different places to try to see if over the next 5 to 10 years, we can make those places more viable places to also list companies.
That's
because I do think it's a real thing to think about when we try to develop the liquidity markets. But obviously M&A is also a big part of it. We've been a big part of some of the bigger acquisitions, right? Global companies like Zynga buying Peak Games in Turkey, obviously Uber buying Careem. Uber also bought a business called Corner Shop in Mexico that was a portfolio company of ours for $3 billion. So I guess my overall view is you have to be long-term on the exit market. We're not going to see in 2023 or 2024 what we saw in 2021, but we will probably see something like that again in terms of liquidity markets.
We're starting to get like so many questions, so I'm going to try and cover
Sorry,
a lot of
I'll
those.
keep my answers shorter. If
No, not at all. It's grateful view. But speaking of just the crazy times for a second, what advice would you give, kind of setting realistic expectations, aspirations for fundraising for startups today?
Yeah, so this is actually a really good question. I think we have a lot of founders listening, so I'll go into it. If you are a seed stage company, a new company raising capital, great news, right? You're in a market where you can go out and raise money. You will be able to do what I believe is most important, which is attract a really good partner, right? In Egypt and the Middle East today, I think there are good partners at pre-seed and seed, both some funds and some angels who can back a company. Following what I call the principle of good dilution, right? You'll trade away 25% of your business for a chunk of capital to get going. My view is if you're raising money at that stage, your valuation might be $6, $8, $10, $12 million, right? It probably won't be 2, but it won't be 20 in this environment. And that's a perfectly fair place to start and raise money and build a company and get going. I do think some founders will be distracted by seeing what companies raised at in terms of valuations in 2021 and thinking, oh, but I want to be like that. The best thing we can do for new young founders is almost take, Amar, have you seen the movie Men in Black?
Yeah.
So Will Smith and these guys running around. When somebody sees an alien or sees them, they pull out this little like memory eraser, right? And they like zap somebody with it and it erases their memory and they never saw it.
Yeah.
If we could do that for 2021 valuations for young new startup founders, we should. And I mean that very genuinely because Bill Gurley has said it, Fred Wilson has said it, a number of people have said it publicly that if people are too psychologically anchored to like what the market was doing back then, they'll struggle to raise money for their new company now. right? So I think you can raise money for new companies now, but it's a new environment. You have to almost go back to where we were in 2019 and 2020 in terms of where is the bid and the ask, where's the clearing price going to be for business to raise a couple $1 million at a seed, right? I think
And
that's
then
kind of my...
What to focus on? I mean, now I tell the team, guys, like, we need to focus on value creation, not valuation, right? And but then what do you actually then focus on during a raise? I mean, you've got the valuation, you try to get to something that makes sense, but what are other things that could also be important during that process and in the terms?
Yeah, look, I mean, stick with the early stage stuff for a minute, and we'll talk about growth stage companies. But I have some real like golden rules around fundraising, right? One is it's much more about partnership than it is about money, right? So focusing on the right people, the right funds, the right individuals, the person who's going to sit on your board. You know, sometimes I call this mentors with money, right? But you really do want to optimize for who's going to really help you on this journey as you go, right? And if you're building a syndicate, like who's going to contribute different things to helping the company grow. When it comes to valuations, if you're really doing early stage stuff, you know, there's no numbers to really crunch, right? So the only math problem you can do as an investor is how big can this be? And then what's the very, very small percentage chance it gets there? You multiply those together, and that's the valuation, right? At angel or pre-seed kind of investing. But for what to focus on, partnership, like getting the right people involved in the company, you know, dilution, right? A lot of people focus on valuation, but the only thing that I think really matters is dilution, right? So every time you raise money, you're selling 10 to 30% of your company. It's probably about 20 or 25%. Can you go up to 30 in a tougher market? Of course. Yeah. Should you go to 50? No. Right. Like, so you should never sell, you know, 60% of your company in a funding round, but anything in that 10 to 30 is pretty acceptable. And then when it actually comes to like striking the deal and doing the term sheet and everything, right? There's a lot to learn as founders, but there's only two categories of terms in a term sheet, right? Everything in there is either about economics or it's about control. And the economics is who owns what and who gets paid what and what order do they get paid in and things like that. And then control is the board seats and the veto rights and the ROFR rights and like who's in charge of what at the company. And my view is you can fix mistakes on the economics later, right? So if you dilute too much, you sell a little too much of the company, you can fix that later, right? You can create an ESOP in your Series B or C where you earn back some of it. You really can't fix the control stuff if you mess it up. And so really trying to be clean. I always say, look, don't even form a board until Series A if you can avoid it, right? If you have really professional seed funds and they want a board at seed, fine, but make it a 3-person board, 2 for the founders and 1 for the seed investor, right? Because by the time you get to A, what you want is 2 founder seats, 1 seat for all your seed investors together, 1 seat for your A lead, and then a mutually agreed upon independent, and you want a 5-person board. It's a formula, right? If you can stick to that, you'll be much cleaner. You know, we've been lucky enough with Endeavor Catalyst, we've invested in, you mentioned it, Amr, but 300 companies. We've been lucky enough to have 51 of them grow up to be billion-dollar businesses so far. But on average, to get there, they had to raise money 4 or 5 times, right? And so part of that is the dilution you take, but part of it is what happens to those boards, right? As you get to Series B and C and D, and you don't want a 13-person board with 7 observers, right? You want to try to be able to manage the governance cleanly. And so, you know, I always say when we're doing fundraising, the first most important thing is get the right partner, right? Get the right people involved. It is a competitive process. So the goal of every fundraise should be to get 2 or more credible term sheets. So you have some negotiating leverage, right? If you only have 1 term sheet, even if you love the partner, you don't have a ton of leverage. And then once you've actually identified those partners, the art of getting the best deal is just deciding what is the most important to you on the economics and the control. But I would always sort of over-index on getting the control piece right. You know, nobody ever said, oh, I sold 0.5% too much at my Series A, right? Like that stuff figures itself out. I have a very similar view on valuations. and this matters a lot for growth stage companies right now who might be psychologically attached to whatever their valuation was of their last round. Ultimately, nobody cares, right? When you become a multi-billion-dollar public company, nobody ever says, what was your Series B valuation? Like, no, it doesn't matter, right? All that matters is the dilution, because that's ownership, that matters. And kind of, do you have the right people on board to build this thing?
Oh, this is great. Thank you so much. And maybe we don't have to touch upon it, but I think the other thing is also some people kind of squeeze in these crazy liquidation terms that just mess up the whole cap table and just create complete misalignment as well with existing investors and new and everything, right?
We should touch upon it. Like, I mean, look, it's a bizarre thing in some ways, the entire invention of preferred shares versus common shares. You can see why it got invented, and it's for the very beginning of a company, right? Because if you're the investor taking a crazy bet and saying, hey, on your napkin, here's $1 million at a $4 million valuation. If the entrepreneur turned around the next day and, sold the company for, $2 million, the investor would be like, hey, wait a second, like what just happened there? So there's a reason preferred shares exist to protect the investors a little bit in the early stages. But the layering of preferred all the way through the stack, and especially of liquidation preferences, which, essentially are just a way of an investor underwriting the downside of their investment, right, and protecting themselves to the extreme. But they create very perverse incentives if you start to layer them together round after round. And so, on growth stage companies, if companies go to market right now insisting that they need to raise an up round or a flat round, or they have to be the same valuation that they were in November 2021, well, the world has changed so much since late 2021 that the only way a lot of investors are going to be able to match that price is they're going to structure in all these terms, right? They say, fine, I'll meet you at your price, but I'm going to put a 3x lick pref on this thing. Don't do that deal, right? You'd be much better off to raise at a slightly lower valuation without all the structure and the liquidation preference.
Perfect. And maybe we can get to kind of just so many questions coming in. I think everyone wants a piece of Alan here with your picking
well, here,
your brain.
I'll look at them with you, but you pick what looks like the most fun, and we'll talk about it.
I think we can go with just a little bit in order, but just try to do kind of this bullet round. So
Sure.
Let's go with qualities or strategies of successful startups in the region to navigate in uncertain times. Any thoughts?
Yeah, look, I referenced this before. I'll keep it short, but one of the qualities I've seen in the most successful founders and leaders of companies, and Amr, you're in this category, right? These are Endeavor entrepreneurs we've been lucky enough to work with over the years. And we know this is sort of statistically, numerically true, right? Because Endeavor has looked at 140,000 businesses, and only the kind of top 1% are in the network. And so we know these are some of the very best founders and entrepreneurs. The quality they all have in common, while the style might be different or the personality might be different, is they are really able to build a culture and set a vision for where the business is headed, right? And I think that's actually really important, because one of your biggest assets is obviously your team and the people who work at your company. And in uncertain times, everyone feels uncertain, right? Everyone's reading the same news. They're gossiping about the same stuff. And so being a strong leader in those uncertain times and being honest, right? And being credible. So this isn't about like selling people a crazy dream that, it doesn't even sound believable, but it's about the right balance of that dream, that vision, that thing, keep your eye on the prize of where we're going, and acknowledging, the tough times that you're going through, that the world is going through today. But it's that culture of, hey, we're on a mission to do something important. People are looking for meaning. They're looking for purpose, particularly in this new generation in 2023. If you can give the people who work at your company, a very real purpose for why they're coming to work every day. And honestly, like in emerging markets, I think this is even in some ways easier to do, right? Because you can see all around you, why are we doing this? Oh, because it really matters, you know? And I think that really does help teams and leaders get through tougher times.
Yeah. And just as a quick note, like me personally, whenever I feel like the team is kind of trying to understand and seeing kind of these uncertain times that we're in, I try to bring in either a customer or a video of a customer or a testimonial of a customer of how we're changing their lives, and just bring that to an all hands or bring that to a meeting. And that just completely changes the energy. So you're absolutely right.
People need reminders of it, right? They remember why they signed up originally, but you know, things like that I think are really helpful.
And maybe just connected to that a little bit is like, are there investors that are considering markets like Egypt right now?
Yeah. So look, I think to inform my overall view, what happened in 2021 in a global zero interest rate policy, you know, availability of capital, money was very available. You had a lot of these global pools of capital looking for yield in different places. That caused inflation in the stock market, right? It caused inflation in crypto. It caused inflation in, I don't know, NFTs, right? Like weird stuff that people were just trying to put their money somewhere. What it meant for the startup world is that valuations in the emerged, developed economies went way up, and that money flowed into frontier markets in a way it hadn't before, right? And so you had more global capital in Pakistan. You had a lot more global capital in Nigeria. You had, to some degree, you had this in Egypt for sure. And when the global macro environment changed, that money didn't like decrease a little bit. That particular pool of capital went to zero, right, for frontier markets. And so we should, you know, as an advocate and a supporter, I think we should be honest that like that money was a very temporary sort of anomalous thing. And that's even as someone trying to build the ecosystem for the next 10, 20 years, I'm not counting on it coming back in any way, right? So that was kind of an anomaly. However, one positive outcome is it got more people who work in some of these global funds more exposure to some of these frontier markets. Now they have a portfolio company or two. Maybe now they're going to a board meeting or two. They're spending some time somewhere. So there's a positive in there of starting to get the markets more visible, because ultimately, you know, I spend a lot of time in Silicon Valley, New York, London, Dubai, Singapore. These are essentially like the hubs of capital. And people invest in companies they know, businesses they understand, markets they understand, and founders they really trust and believe in, right? And so people do need to get some knowledge of the markets to do that. My view on Egypt is that there is regional capital dedicated to the region. Some of it is truly more dedicated to the region, where some of it turns out when things get hard in Egypt, it will all sort of flood into Saudi, right, or the UAE. But you know, my view is that there is capital available. There are dedicated pools for the geography. They're not big yet, right? If you do this globally, you know, emerging market venture capital, China and India are sort of the big markets unto themselves. Latin America and Southeast Asia are at a certain level of development. The Middle East and Africa are coming behind them. But I do think MENA eventually, in a market like Egypt, someday has the potential to be where Indonesia and Brazil and Mexico and some of these other places really are. So I think that's where it's headed.
And we've seen pockets, like you mentioned, some funds or sovereign wealth funds that have these pockets marked for Egypt or a country specifically, right? So I think we've seen that as well, maybe targeting a little bit on the kind of Series A onwards, I believe. I think tied to that, how do you guys even consider kind of the currency devaluation or risks into your projections? I think that's coming from an investor. I think Lexi sent that one.
Yeah, look, I think if you're going to invest in these places, you're going to have to deal with currency. One small hedge that we have in our portfolio, and you know, again, Endeavor is really holding a mirror up to the market on where the entrepreneurs are building the best companies. So this is less by design than by sort of serendipitous accident, I guess. But about 75% of our investments have a cost base that is local and revenues that are local, right? So let's use the Turkey example. Yemek Sepeti, the leading food delivery business in Turkey, right? All the costs are in lira, and then obviously the revenues are also in lira. But about 25% of what we invest in have local teams, local cost base, oftentimes in local currency, but global customers, right? So paying typically in dollars or euros or another currency. And so that is one way on a portfolio level that we end up with a bit of a hedge, because in the Turkish example, that's Peak Games, right? So amazing gaming engineers in Turkey, but the customers were global, right? And so in a sense there, as the local currency devalues, the profit margins on the business get better and better, right? And so we do have a little bit of a mix of that in our portfolio. But I think for Lexi or anybody else listening who's in an investor position, my other real macro view on that is you just got to play the long game, right? Like, I think it is just a thing. You need enough time in your fund life, to do this over 5, 7, 10, 12 years. The kind of open secret of venture capital is that everybody runs kind of 10 to 12-year funds, and they actually probably take 15 years to get to full liquidity. It's just a long-term thing that we're doing.
And maybe quickly, have you been seeing any action in other parts of Africa as well, like Kenya, for example? Is that a market that's been picking up in terms of investments versus kind of Middle Eastern countries, especially on Egypt?
Yeah. So look, Endeavor's younger on the African continent in sub-Saharan Africa, but we have been in South Africa for a long time, and we opened up in Kenya and Nigeria in the last kind of 5 to 7 years. People do talk about what's happening with startups or venture capital in Africa. I think that's a little bit of an outsider's language, right? Because in reality, you're talking about kind of 4 or 5 city level ecosystems, right? If you look at all the venture deployed on the African continent, and there's good people doing, putting out the data on this, it's Nairobi, Lagos, Joburg, Cape Town, and Cairo, right? That's where most of the money is flowing. We have some pretty exceptional investments in Morocco and Tunisia and some of these other places you wouldn't expect, but by dollars and by numbers, most of the money is going into those ecosystems. And I do think that money will continue to flow to Kenya, to Nairobi as sort of the hub for East Africa, to Lagos to some degree, because everyone just thinks Nigeria is such a big market. And South Africa, has a long history of having very, very good talent, like great entrepreneurs. It's a hard place to invest in because of the currency controls and all the things you have to do on getting money in and out. And it is sometimes a little bit of a middle country syndrome where, people are building for South Africa, but in and of itself, it's probably not a big enough market to build a multi-billion-dollar company. We see that at Endeavor globally, right? If you have 200 million plus people, you can just build for your own market. In fact, if you have 80 million or more, thinking about places like Vietnam, Philippines, Turkey, Egypt, in some verticals, you can build $1 billion company just in your country. And if you have, under 20 million people, then you have to be regional or global from day one. The middle country trap is when you have kind of 30, 40, 50 million people in your country, you build only for one country for a while until you realize, oh, wait, I actually can't be really big. Now, you can build a great business, don't get me wrong. But for what we're aiming at, of can you build multi-billion-dollar businesses, it's harder to do.
And actually, along that same line is another question. Are there any certain sectors do you think are more favorable in the Middle East or attractive for investors?
Yeah, so I'm relatively industry agnostic because I've been trained at Endeavor to be so. But one advantage of doing that is you can kind of see the waves of what happens in emerging markets. And Amr, we might even have talked about this because I talk about it a lot. There's very clear waves. If you study India, you study China, you study Southeast Asia, and you study Latin America, every single one of these regions, essentially, the first wave is commerce, consumer tech. That's e-commerce and things like that. Then you have to build the digital infrastructure to support it. So that's mostly payments and logistics. Once you do that, though, you've got a whole set of builders and coders and founders, and usually like accelerators and incubators set up to do things. And you start to do wave two, which is technology disrupting the major parts of the economy. I should say disrupting and enabling. That's financial services beyond just payments. That's transportation, that's education, that's healthcare, that's actually agri and food supply chain. So that's where you get these, fintech, ed tech, health tech, usually transportation is called something clever like smart cities, right? Which means moving things and people around. But that's wave two. After that, you really can get to true kind of enterprise B2B, which I think really comes in wave three. And if there's a wave four, then it's deep tech, biotech, things like that. And only the world's most mature kind of venture and entrepreneur ecosystems have wave three and four. Only now are you seeing India and a little bit Brazil get to true wave three. It's a little confusing because a lot of B2B companies in emerging markets are actually targeting the SME population. And so they behave and look more like consumer businesses. So those will show up earlier, but they're not these long, large enterprise sales cycles. So my view on it is, are there sectors I like? Absolutely. When I feel like it's kind of the right moment for those sectors in that market, right? So for Egypt, we're clearly in wave two, right? We're investing in a lot of interesting agri-tech, ed tech, health tech, right? If you look at our portfolio of what we've done recently, it is like Mozara, right? Agri, it's Grinta, it's health, it's education, it's fintech beyond just payments. So I don't know, I think that's really kind of where we are in that market, and that chapter lasts a long time, right? So I think we'll be investing there for the next 5 years. Also, I wouldn't be doing my job if I didn't say AI, AI, AI. But all I really mean by that is AI is going to end up being like mobile, right? It's not a category unto itself. It's a tool that's going to get layered into every single business.
No, that makes sense. And we had actually one of the comments here is we've had a wave four kind of deep tech back in the day with like Khaled Ismail a little bit, and like he was chairing Endeavor and the exit that he did to Intel. I think you had some pretty deep engineering in Egypt at a point in time.
I remember that, right? Sistasoft. Like, I think the idea is that deep tech comes really in pockets because it's such specialized expertise, and it can really be anywhere in the world.
We're getting a lot of questions that are very similar about kind of valuations being low today. Isn't this a good time for investments to come in, especially in Egypt? We're seeing kind of current valuations in Egypt reach a stage that kind of are attractive, but why aren't investors kind of biting? It seems like a lot of these are comments, but I think we've tackled a lot of this before. Maybe kind of just cover again, like how does Egypt compare to other markets where you guys are operating and invested? Maybe in terms of number of markets, the velocity of investments that you're seeing. Maybe we could shed a light on that.
Yeah, sure. Look, I'll also be very clear. The chairman of our fund, Reid Hoffman, who's the co-founder of LinkedIn, he's the biggest LP in all our funds, and us having raised now $500 million over a decade, specifically to invest in emerging and underserved markets, right? So we have a very real bias. But what Reid says about venture, which I think is a great quote, is it's not easy, but it's actually quite basic, right? It's very simple in its construction. He said to be really good at venture capital, you only have to do two things. First, you have to be contrarian, and then you have to be right, right?
Yeah.
And, I think if we hold a contrarian view at Endeavor, if I do personally, it's a very deep, real view that there's amazing entrepreneurs in every place in the world, right? And in many of these places, they are overlooked, right? I think some of the comments, I was actually just reading them too there, Amr, have to do mostly with the idea of the way capital sort of like flowed and then flowed out and then now feels like it's just missing, right? And by any fundamental analysis, you're like, wait a second, the opportunity is even better now than it was before. And if you're playing for the 10-year horizon, and this is my view, like we've been very active actually in Egypt and in the Middle East in general, historically, Latin America has been the #1 market Endeavor's invested in, right? It's about 40% of our track record in our history. And MENA has been #2. But actually, I looked at our data for our Fund 4, which is the last 20 months. MENA is actually our #1 region, only by a little bit ahead of Latin America. But that tells you something of like how we feel about not only, exciting things happening in Saudi and the UAE, but what's happening in Egypt, right? And even in neighboring regions, what's happening in Morocco and Tunisia, what's happening in Pakistan, what's happening in Turkey. So we certainly are in that contrarian camp, right? Of we're going to continue investing in these places because we are long-term fundamentals investors around the opportunity in emerging markets. A framework that might help the audience is that not all venture are fundamental investors. Actually, a lot of them are what you might better describe as momentum investors, right? And I was in New York City last week for LAVCA, the Latin American Venture Capital Association event. And somebody paid a real compliment to Lee Fixel, who was at Tiger for years and years, and then now runs a $1 billion global fund called Addition. And they said, Lee's the best momentum investor I've ever seen. And what he means is that he can spot a fundamental opportunity early, right? He did this in LATAM in 2006, right? He did it in India in 2008. He sees it, and then he makes a lot of investments. And then a lot of other capital that is momentum driven follows him, right? And this is like actually a better, I think, more polite and more accurate way to describe FOMO investing, right? Because it's not really just some psychological hysteria, right, of a fear of missing out. It's actually driven by real momentum of these smart people already put money in. If I put money in now, these other smart people are going to put money in after me, right? And it kind of builds on this momentum. What's happened for markets like Egypt today in the global investor community, there's no momentum, right? The momentum has broken completely. And that is the global macro, but also some of the local things. And so what you have to do is try to find investors who truly are fundamentals investors, right? And get back to this idea of like, hey, look at the size of the opportunity of what we're addressing and what we're building, and come be our partner for the long term in building it. I hope at least a few of the founders listening, will join Endeavor and give us that chance to be their partner in doing that for the long term.
Yeah, and maybe it's a good time to kind of have that question answered. Just really a plug on how does entrepreneurs just go through super hard psychological times, and especially during these days, what kind of support systems does Endeavor have in place to support entrepreneurs? And I kind of know the answer to that one, but
I was going to say you can answer that, Amr.
No, you go ahead.
Well, here I'll go ahead and maybe you tell us what's been most helpful to you over the years. But Endeavor really does believe in this idea of entrepreneurs change the world. We're just here to help. We believe we can help by both scaling your company, right, helping you scale your company, and helping you scale yourself, right? And that again goes back to kind of the theory of change. But it's not only about the dozens of different programs we have on accessing smart capital, accessing new markets, right? Bringing great talent to your team. Like we run so many different programs kind of specialized on different parts of building the company. And to be clear, we are not very good at the 0 to 1 stage, right? Lots of other people are much better at the beginning, early stages of company building. They have product experts, they help find product market fit, they do all those things. Endeavor's really good once you've found product market fit. And now what you need to do is scale. Right? You might have 50 employees, but you have an ambitious plan to have 500 or 5,000 or 50,000, right? That's what we can help businesses do. I mentioned being in London 10 days ago. We were lucky enough to be doing a chat with the founder of InstaDeep, who just had this great exit. And he said, I think I'm, very unique. And we said, well, honestly, like we love you guys and we love this story, but you are very special, but you're not unique. You're not the only one, right? Like the office we were sitting in was that of Globant, which is a company that came out of Argentina that when we got to know them 15 years ago, had a couple hundred engineers. Today they have 27,000 employees, right? They're a New York
Crazy.
listed company.
Yeah.
So what Endeavor really wants to do on the company side is help build the capacity to take it to scale. And what we want to do on the individual side is help you scale yourself, right? Because we believe founder-led businesses actually do the best in the long run. This has nothing to do with like throwing out founders and putting in professional management teams. Like we just don't believe in that, right? We believe if we found really special people, Amr, like you, maybe I'll make you blush if I do that enough times, that it's about helping you grow and scale. And, you know, we meet a lot of founders in their 20s and their 30s. And the most rewarding part of my work now, 17 years into it, is seeing the human beings, like seeing what the leaders, these people, these men and women have like grown up into being over the last 5, 10, 15 years.
Yeah. And maybe just to share from my side, how Endeavor, there are very hard times and people think that you're alone going through them, but you're definitely not. And what Endeavor does really well is it allows you to bring all of these people together. They organize these sessions that are founder only, entrepreneur only, in a closed room, no one else there. It allows you to build these relationships with other people that are very similar to you in terms of the stage and maybe the problems, etc. And sometimes just even talking to someone who can relate to some of these problems and getting some ideas or seeing how others are dealing with it, or just sometimes just even being heard makes a big difference. It's one of the big things about Endeavor, and also being inspired. So a lot of these things about, you know, looking and aiming higher and allowing you to scale yourself. You scale yourself by just surrounding yourself with people that are like you're better than you, right? That's one of the fastest things I've seen as a big driver for growth for me personally. So we're coming up to the end. We still have so many questions. You know, I think if there's a way for us to answer these questions a little bit later, maybe even in writing if we can, but just so much. Thank you so much, Alan, for all of your insights and sharing your experience and your thoughts. You have an amazing macro view and broad view of markets that resemble each other, and it's great to have you share all of this wisdom with us. Thank you very much, Alan. Really appreciate it.
No, of course. I think, Amr, in our last 60 seconds, I'll just say thank you for doing this with me, and obviously to Amr Alaud in the Egypt team. I'm a big believer, right? I came to Cairo earlier this year. I'll come back next year, right? We're going to be investing in this ecosystem for a long time. There's a really smart question right at the end there about, you know, business models and the old adage of like everybody copying Silicon Valley, right? Of like, oh, the thing that got built in Silicon Valley and now goes the other around the world. I think that's actually kind of a 20 years old mental model, right? I think today, much more what we see at Endeavor are business models built for emerging markets, right? In fact, I'm a partner of an early stage venture capital fund called Alter, where this is the entire investment thesis, right? As we study India, we like study what's happening in India and a little bit Indonesia and Brazil, and we say those are the business models that we're actually going to see in Nigeria and Pakistan and Egypt and Mexico and Vietnam and these other places. And, you know, it's been tremendously successful for Alter as an investment thesis. It's very true with like what we see at Endeavor. And, you know, I think it's the future, honestly. It's kind of this emerging markets learning from each other, because it is where all the growth is going to come from. And I can make a really fancy presentation and talk about how the markets we're talking about actually make up, you know, 60% of the people of the world and 40% of the GDP of the world, and it's the fastest growing segments, but it's only about 8% of the global private capital. So it's just underfunded, right? Any way you slice it. But more important for me than those statistics are the experiences I've had over the last 17 years with human beings, like all the founders we support, to really understand this idea of the compounding of human capital, right? And I think we understand compounding in financial markets thanks to Warren Buffett. Everybody's like read it and studied it. But I think we underappreciate, or we don't fully understand like how compounding actually works in networks of people. And
Yeah.
Endeavor is by far one of the richest, like most dense networks of humans I've ever found. That's why I'm addicted to doing this work
100%.
and get up at 6 a.m. to do it. So
That's
anyway,
the
thanks for
secret.
having me. It was a lot of
17
fun.
years right there. That's why, right?
Yeah.
Thank you so much,
exactly.
Alan. Thanks,
Of
everyone.
course.
Thanks, Endeavor office. Thanks, Amr Abd and team for arranging this for us.
Appreciate it. Amr, fun
We'll
to do
get-
this together.
Yeah, it's always fun. So we'll get this recording online with Endeavor. So thanks, everyone, again for attending.